Okay, perfect. So today, well, I guess I'll introduce myself first. I'm Alaina, co-founder of Options Bay. We really focus on teaching women stock market and really just pushing financial literacy. And so today, I actually wanted to kind of get into the moving averages because I think they kind of confuse a lot of people. But there are two different kinds of moving averages. You've got your EMA, which is your exponential moving average. Then you have your simple moving average or your SMA, which is a little different. And so both of them are going to track trends over time. They're going to track pretty much like our price fluctuations, but it kind of smooths it out. So I'm going to bring up our EMA 10, which is like a 10-day EMA. And then I'm also going to bring up the simple, which is, there we go. So the blue is our simple. And then the pink one, or purplish, I guess, is our EMA. So you can see they're not quite perfect. They are different. I think really you see the differences in the EMAs over the longer term, but I'm just going to kind of get into some of the differences. Again, the SMA, it does calculate the average price data over a certain period of time. The ones I pulled up here, I've got the 10, 20, 50, and 200. Those are my preferred time intervals. And so, of course, this is going to give us an average of the price movement over this many days. So this is the time period. I've seen people do 5-day moving averages. I've seen 7. So everyone kind of has their own preference with these. But the 10, 20, 50, 200, I really like because it gives me my short-term movement, it gives me my long-term movement, and it's all right in one place, depending on my chart interval. So the SMA, it does calculate the price data, but it actually equally weighs each of the days that we're inputting. So like um, it's totally even. So with the EMA, it actually puts more emphasis on the more recent price changes. So for me as a scalper, I actually prefer the EMA just because I think it moves a little quicker and I can see price changes a lot faster, in my opinion. But I do know people who trade with larger volumes that like the moving average because when you're dealing with price fluctuations over a long period of time, if you're trading with heavy volume, those price differences make a way bigger difference than a smaller size trade. So that can be like, a couple cents on the small end to like a couple dollars on the larger side. So the SMA is the most common just because I think it gives a lot of people, I guess it's more, again, like I said, for the larger position traders, I think the SMA is the preference there. Let's see, sorry, I'm just going over my notes here. Okay, so yeah, I just want to show you guys how this kind of looks on a chart. So here's our 10. I'm going to go ahead and add the 20 on both of these, and I'll take the 10 away. Let's see. So you can kind of see these are, getting a little further apart from one another. Then we can look at the 50 just to compare. And this is the 1-day, 1-minute chart. So this is for like, scalping. And I'll show you how this kind of looks different too on a larger term chart. And so we'll look at the 50. All right. And so really I can get into really kind of how I use these as well. So when I'm scalping, the 50 is like the golden standard for me. So if I'm crossing up over my 50, and that can be your simple or your EMA, that's a really strong signal for an uptrend. Now, if you go back the SPY yesterday, we crossed down below the 50 at open, and it took a nosedive. And you can kind of see all day long. Let me take off the blue one first. So you can see all day, this is my EMA 50. After SPY went down, it actually retested this EMA 50 pretty much all afternoon. You can see how it kind of banged its head up there over and over again. Once we completely cleared it, we had a little resistance up here, but we did continue, we had a nice breakout. We had a really, really nice breakout. And so that being said, the 50 is probably my favorite moving average. And I'm going to go to a longer time frame. Let's go to the daily chart and see how this looks. All right, so this is a way longer time frame, but you can see with the 50, and I'll bring up our other 50 as well. You can kind of see how the SPY has continually bounced off the 50 and continued to rip all year. So even though we have these crazy down days, you can see here, once you go on a daily chart, a longer time frame, those dips don't look so scary. So We did have this huge red candle yesterday with the sell-off, but you can see here we bounced right off of our 50. So I don't know if we're going to head back up just yet because I think the SPY still needs to kind of cool off a little. But we know the market doesn't go up and down in a straight line. So this is a nice way to kind of see the bounce. We can go down to a 4-hour chart. And you can see where we dip below our 50, and then there's our bounce, right? So there's our bounce. That's what we're on today. But you can still see this long wick here. We still have a little bit of resistance. So we're not quite bullish, but looking at our MACD, this is in a reversal, and our RSI did come up off the floor. We were way oversold when we closed yesterday. So this bounce was pretty much a given. I don't know, like I said, I don't know that the SPY is going to totally reverse right here because I still think it kind of needs to cool off a little. But I think the Fed has a lot going on this week. So we should see, I think we'll see more red. I'm a little bearish right now. But that being said, let me pull up the 200. I actually like the 200 as well. Let's see, we'll go back to our 4-hour chart. All right, so one thing that I teach my students, I kind of like, well, I call it like the bumpers or a bumper system. But basically, when we're trading, I have my EMA 10, I have my 20, my 50, and my 200. And so let me go, I'm actually going to go back to our 1-minute chart. Basically, when we're entering our trades, I always teach them, you want to cross the 50. You want to completely cross the 50, open and close above that thing, and that's going to signal your uptrend. So looking at the SPY today, we also have a golden cross. So we have our 50 crossing up over our 200, which is very bullish. But once we're completely cleared over the 50, that's a green light for the upside. Same on the downside. Once we completely break down below the 50, that's pretty much our signal to be bearish. We also use price levels like support and resistance. So here we have a clear level of support. So even though we did break the 50, we didn't actually break our support level. So that's kind of like a way to just double check yourself and wait on, the best possible entry and really just waiting on those confirmations. That being said, we see the buyers holding the price up. Let me draw a line here. This wicked at, looks like 422.12. I'll just draw our level here. All right, so we have a little support here. The buyers are holding it up. This isn't perfect. I'm just eyeballing this right now, but just for the sake of learning, back to the bumpers. So once we're in our trade, right, we break our 50. The first thing I'm watching for is for us to stay above this EMA 10. As long as we stay above the EMA 10, I have no reason to consider anything happening as far as a reversal. Even here, you had a little profit taking, but we're still staying above this 10. Now up here, we did have some more profit taking and we bounced off of our 20, which is our second bumper. So this is kind of where your risk tolerance comes in. If you're a little on the riskier side, you might say, hey, we bounced off the 20. I'm still riding this thing out. Some people, will say, hey, I see a red candle, I'm out of here. So that kind of comes down to your own personal risk tolerance. But that being said, we did hold up above the 20. And here we have another example of bouncing off the 50. So here we broke our 20, we broke our 10, and we bounced right off the 50 and kept on chugging. So this is, again, for the riskier people. I don't really like to hold something until it retests the 50 because, again, we know what happens when we break below the 50 and we have a really strong downtrend. And then, so of course, after you break down below the 50, the 200 is kind of like the final bumper, I guess you could say. And so yesterday, looks like we did cross below the 200 on the 16th, which that's a death cross. And then here we are trending down until we cross back over. So there's our golden cross. I really like moving averages. They kind of help traders see the bigger picture. A lot of times, especially for beginners, it's very confusing when you see red and you think, oh, it's going down, but that's not necessarily always the case. There's always going to be profit taking. There's always going to be buyers coming in and buying prices up, buying dips. Like, for example, yesterday, the whole market took a dip for the most part. There were some things that took off like Moderna, but for the most part, everything was down. And so you do have those investors who come in and they're like, okay, these prices are beaten down. I'm going to buy them back up. And that's what we're seeing today. So again, moving averages, I think they just really help take a lot of the guessing away from price action. And I also, like I said, I do use support and resistance levels. Like for here, for example, let's see, let me go back to the beginning of today. Oh, here we are. Okay, so this morning, I actually traded the spot today. And we opened up, it kind of popped a little, and then it kind of moved sideways for a second. And so I wasn't really sure if we were going to break up or if we were going to move sideways all day or if we were going to break down. But the first thing I kind of noticed just reading my candles was that we stayed above my 10. We didn't cross it. We didn't, I mean, we had a little dip of a candle here, but the buyers pretty much held the price up today. And so we had a morning high here. It looks like the 425.91. And so as soon as we kind of started retesting that, I was like a way more, I was way more comfortable running SPY on the upside. All things considered, we had a dip yesterday, recovery today. So this was pretty much the green light. So I did hop in the SPY this morning. I did ride it up. I got out again when it started testing the 50, just because I didn't really want to ride out a reversal on this thing. And it continued to run a little bit, but you can see here we do have some resistance. So now the bears are kind of stepping in. But again, you can see the buyers holding these candlesticks up. So I don't know if it's going to dip or if it's going to reverse. Looking at this, it's very likely to continue getting bought up, actually. Let's see. Do you guys have any questions? I always forget to check the chat. And I feel like I talk so fast. These always go really fast. I'm so sorry. Oh, can you guys hear me? Let's see. Yes, I just scout primarily on the 1 minute. The reason being is I like to see every candlestick. I like to see that we're making new highs. Okay, good deal. Thank you. I like to see that my candles are making new highs. Like for example, here, like the example at open, you see the high here, and here's all your open, your high, your low, and your close. I watch these like a hawk when I'm trading. So I see here my high was 425.91. In order to be bullish, I have no reason to be, bullish unless we can break that high, right? That 425.91. So here we almost got there, 425.62. Here we actually wicked higher, 426.13. So that's kind of my green light. And so I also look at my lows. So here your low, 425.25. Over here, even though we have red, 425.25, we didn't go that low, right? We never got that low. So that's a strong level. Well, I won't say strong level, but that's a level of support. So as long as we're not wicking lower, it's fine. And again, you want to make higher highs and you actually want to make higher lows as you continue to trend up. Let's see. And so I do like to, sometimes if I'm already in a trade, like today, for example, with the SPY, I entered on a 1 minute, 1 day, 1 minute chart. And then as I was watching the candles form, I did switch to a 2 minute just because it's less candlesticks and those dips. A lot of times those dips can shake you out, right? So if I'm on a 2 minute chart, I can still see my highs and lows, but that sell doesn't look so dramatic on here because there's only a little doji here. So it's not even anything to kind of worry about. And it's even cleaner, honestly. So you're looking at your, excuse me, you see your EMA 10, and we clearly didn't even get anywhere near it, that whole dip. So the 2 minute chart, I like it too. I know some people that use the 3 minute. I'm not a huge fan of the 3 minute. I would say once I'm in a trade, I don't mind being on a 3 minute. But for my entries, I'm always on the 1 minute for sure. My typical target profit. Oh, sorry, I skipped one. When do I use the EMA? I actually use the EMA predominantly. I use the EMA predominantly. The SMA, um, it's not, like I said, the SMA is not bad. Like it literally gives you really, really similar trends. Let me change these colors so you guys can kind of differentiate them. Let's do yellows. And actually, I think I can. I don't know what this is going to look like. Okay, that works. So the moving averages, the simples are going to be our dots. Let's see. And this is TradingView. For anyone who's not familiar with the platform, it is free. You get 3 free indicators. One thing I will say about TradingView, if you're trading something with low volume, and you're on a 1 minute chart, a lot of times they'll consolidate the candles. So I think it was Amazon we were trading a few weeks ago, and we were on a 1 minute chart and didn't realize we were only getting a candle like every 8 minutes. So for that, I would say like TD Ameritrade or Webull, just something that's going to give you all your candles. I do love this platform, but the time decay on Amazon, you definitely want to be getting all your candlesticks because that 8 minutes can make a huge, huge difference. Okay, but just looking at this, you can kind of see where your dots, these are your simples and your EMAs, they're very similar. They're not exactly the same, which like I said, on the longer term, they do make a bigger difference. But for your day traders and your scalpers, even your swing traders, short-term swings, there's really not a huge, huge difference. Let's see. My typical target price and how long am I in on average? That's a really good question. So I like to trade the SPY anytime the markets are choppy, which is a lot recently, but I like to trade the indexes. And so um, a lot of times, if you're buying a lot of volume, like if you're buying a lot of contracts or a lot of shares, you don't have to be in there long. So I've had scalps where I've made over $1,000 on like 4 or 5 candlesticks. Um, Today I was in there a little longer just because I was writing it up. But typically, if you get a good entry and you catch a little run, like even, from breaking the 50 to here, this could be a nice trade if you're going in heavy volume. So I know a lot of times I hear students say, like, I don't have time to look at a chart all day. It's really not necessary. If your entries are, we want to be snipers and we want to take, calculated risk. And so if you have, and that comes with discipline too. A lot of times, even I still struggle with waiting on an entry. I literally will, see something get close to the 50 and want to jump in and not wait for it to clear my resistance level or not wait for it to completely break over the 50. So a lot of times, like back here, you see how it kind of tested the 50. You want to make sure you're clearing it, right? You want to totally make sure that you're clearing the 50. My target profit, I don't really like to set a target profit. I just say, like, once you kind of see the reversal come in, just lock in what you can. I think a lot of times when people say, like, oh, I want to make $100, they find themselves holding on to something until they make $100, and you might not, you might make $99 and then you've held it too long. So I just like to wait on the candles to kind of reverse for me and the sellers to step in, or if I'm in, on the downside, the buyers to step in. And I just play what the chart's telling me to do. I don't like to write out reversals. And I had to learn that the hard way. I always thought I knew better. And I just had to really respect the charts. If you don't respect the charts, they will not respect your portfolio. Let's see. Do I use this for daily option trades? Yes. So I trade with this every single day. And one thing I like about having all 4 of these time frames on my chart is, like, if I do decide to swing trade, like let's say we go out, let's do a 6 month chart. I still have my 50 and 200 on my chart. So I can still see longer term trends. And I don't have a whole nother setup. I know a lot of people do have different setups for their charts. But I think it's really cool that I can just switch over and now I still have my 50 and 200 here, looking at longer term time frames. Um, and when I trade SPY, what is the delta you use? So usually when I trade the SPY, I really like same day expirations a lot. I wouldn't recommend those if you're not comfortable charting and you're not comfortable getting out, because time decay on same day expirations is gnarly. But the way the gamma and, the theta is high, so the gamma is high, and that really pushes your delta. One thing I will say, I don't so much look at delta when I'm scalping. I do look at it as far as, like, if I want to go in the money or out of the money. I like to compound my delta in a way that I'm getting a better deal. So sometimes you can get a way better return going out of the money versus in the money just because you're compounding that delta and the premiums are lower. If I'm swinging something, I do have a rule for that. I don't swing anything with a delta lower than zero point 0.3. Zero point 0.3 is the cutoff. Reason being, if you're swinging something out of the money and your delta is less than 0.3, then you're going to start to see your theta and your delta very close together, and you don't want to lose money faster than you're making it. So for my swing traders, zero point 0.3 or higher. For my scalping, I'll go down to like 0.2, 0.15, and just buy a bunch of contracts basically to compound that. Do I use a market order? No, I never use market orders. I've never done a market order, always a limit order. Always a limit order. Yep, and look at the SPY, guys. Right here, this is a nice bounce off the 200. And it's retesting the 50. And this is a 2-hour chart. Let's see. I'm going to take these symbols off and we can look at another stock. Let's look at, let's see. We can look at the Qs. Oh, I've got a fib on here. Okay, so the Qs, you can see here, the Nasdaq has ripped. Let me go to the daily. The Nasdaq has actually ripped. And actually, I'm going to go to the weekly first because this was crazy. If you look at this, right, this is one candle for a week. We have 1, 2, 3, 4, 5, 6, 7, 8 consecutive weeks of uptrend. So this this pullback, we need not panic. I think a lot of people have been freaking out because tech, but it's like this thing has literally been ripping for 8 straight weeks. But I'm going to go back to the daily chart. And we can see here, you see the NAS, it literally, the Qs just bounced off of your 20. So that's a good thing. What expiration do I use for SPY? Typically, I've had the best luck with the weeklies on SPY, to be honest. And I say that because I'm scalping in and out. So I'm not swinging from one day to the next. Like a lot of people Friday were, encouraging me to go in on SPY puts, which I didn't do. I wish I had because I see what happened yesterday. But at the same time, I was able to go in yesterday morning and ride the SPY down even further just because the daily chart was still supporting a bearish sentiment. But I think with SPY, if you're going to scalp it, that's great because they have the same days or even weeklies. But if you're going long term, that's a little bit of a different animal. And I don't even really want to speak to that because last year, when I first, I ran puts on the SPY and I was successful during a market correction. That being said, SPY has since ripped. And so I don't think it's a good idea to necessarily go long and try to short the SPY. I think that's like jumping in front of a moving train. So the SPY goes up. We can short it, we can short it on these pullbacks and corrections and things, but I learned my lesson trying to short the SPY. So, oh, what expiration day? I trade it Monday, Wednesday, Friday. I really trade it Monday through Friday, but Monday, Wednesday, Friday, you get the best bang for your buck on those out of the money contracts. And the Qs, if you guys didn't know, they have 3-week or 3-day expirations now too. They expire Monday, Wednesday, Friday. Let's see. I guess we can kind of get into the VIX too. If you guys, I prefer UVIXY just because I think it moves a lot smoother than VXX, but someone's got options I use on the Friday expiration same week. Yeah, so if it's Friday, I'll use Friday as the same day expiration. But if it's like Monday, Wednesday, I'll absolutely still use, Monday, Wednesday expirations. Like today, for example, I did a Wednesday expiration. And so that's just honestly, and I just want to kind of clear this up. That's like my preferred method, but there's nothing wrong with buying more time on your contracts. There's nothing wrong. You can always buy more time. Even if you don't need it, it's kind of like insurance. Even if you don't need car insurance, you still want to have it just in case you need it. Let's see, menu, scalps by. Oh yeah, so when I'm scalping, I don't even use stop losses. And the reason being is because I'm not in there very long. Like I said, some of my trades are just a couple minutes. Today I ran it a little longer just because like the market got hit, the SPY got hit really hard yesterday. And so I was really confident that the SPY was going to recover. So I wrote out some of these pullbacks. But again, I'm definitely watching to make sure it stays above my 10 and 20. And once it started testing that 50, I was out of there. I was literally out of there today. So um, that's just, again, that's like your risk management. But if you're just getting in, like, for example, if you were to got in over this cross and just ridden it up here, that's like literally, that's not even 10 minutes. So I don't usually set stop losses. If I don't have a stop loss though, I'm going to get out before I let the thing reverse on me. I really don't like to ride out reversals. Today on the SPY, it was about 500 bucks. It's on our Instagram. Our Instagram is Options Bay. And I actually just opened an account on TD Ameritrade, so I'm just getting familiar with the platform. So I have not gone crazy big on there yet. I just want to make sure that I'm successfully executing trades just because I'm on a new brokerage that I'm not used to. I came from Power E Trade. I had a lot of issues over there, so now I'm at TD and I like it so far. But I definitely, what was it? I think 2 weeks ago I had like a 7K day on the SPY on E Trade. Let's see. Oh yeah, I was talking about UVixy. All right, so UVixy, this is an ETF that tracks the VIX. And basically, I like it because it's a little more liquid. The contracts are really cheap, but this is the inverse of the SPY. So if the SPY is going up, then UVixy, VXX, all the VIX ETFs, they're going to come down, and so they're totally inverse of each other, and it's like a double play. So while we had the golden cross on the SPY, we actually had a death cross on the VIX. Um, and so on the downside, which I'm glad I pulled this up because now you can see the downside. When you're running puts, right, I like to wait on, confirmation of we're breaking below our 50. So here we broke below our 50. You can see this thing sold off. And then on the downside, here's our 10, here's our 20. We're staying below our 10. You can see here, we tested the 20 and rejected it, came on down. And so this was a beautiful pullback. This is a beautiful pullback. And this is literally why I love the moving averages so much. Well, I'll say EMAs, the exponential so much, because they literally give you a guideline. It's literally a guideline. So you're breaking your 50 and you ride this down. As long as you don't break that 10, there's no reason to fear a reversal. Even if there's a little green, you still see it struggling to get over that. Now down here, we're even still falling. So down here, you can see we retested it, rejected it again, and now you're retesting this 50, which here I probably would have headed out. I don't like to ride sideways either because that's time decay. If I'm doing weeklies, time decay again is gnarly. Same day expiration, time decay is next level. I remember I had a trade, I think it was last week on SPY. I had one red candle on a same day expiration and it was down like 500 bucks. It was literally down like 500 bucks off of one candle, one reversal candle. Let's see. Um, Honestly, that depends on the trader and the risk tolerance as far as the win percentage. I will say it is a higher percentage of success. Since I've started trading this way, it's actually increased my winning percentage. And it's easier to spot, false breakouts. So like if I didn't have these on my chart, like let me take all this off, right? If we didn't have this on our chart, and we're just like going off the vibes. You might see green candles and freak out and exit your position. But if you had that 10 EMA around there, it's clearly telling you it's not breaking, right? We're not breaking it. So there's a whole nother move here. Another thing that you can do, once you kind of start scalping like this, I think you'll see that 25K, if you haven't already, hit your account rather quickly. I did it in like 90 days because I got banned. I got banned off Robinhood and I went to E-Trade. But that being said, once you hit unlimited day trades, then you can really get into like, let's run this down. Okay, I'm going to get out here and get back in here. I'm going to get out here and get back in here. I'm going to get out here and get back in here. And you don't have to ride that out, right? You really don't have to ride it out anyway. You can just scalp these and get out when you see a candle you don't like. There's no, you don't absolutely have to ride this out. I'm just saying if you want to, you can see it's a little clearer how to stay in and when to get out. When do you do entry? When the market change directions, wait till 50 across to 200. Yes, I'm glad you brought that up. So one thing I will say, in situations like, let me see if I can find an example on the SPY. So sometimes you'll be in a death cross, like your 50 will be below your 200, but your stock will actually start to reverse. Let's see, like here. This is a good example. Well, this is a dip. Well, whatever, we can use this. All right, so here you can see we're down below the 200. We are in a death cross. you came down, and now you're retesting that 50, right? So here's a nice double top for us, which is a bearish reversal. We came down, and then you can see over here, we did break the 50, right? We totally broke the 50. One thing I'll say that I've noticed, and not just, and this is on UVixie, but this is on a lot of stocks that you'll see. If you're below the 50 and you're trending up, there's going to be a lot of indecision around the 50 and the 200. So I don't personally jump into an uptrend unless the 50 is back up over the 200. And that, for me, that's just giving me peace of mind that I'm not about to jump into, like, this is so choppy right here. And then you can see over here, you know, once you clearly broke, and we have a little resistance, I'm going to draw a line here for you to see. This is literally my thought process when I'm trading. Here's my tallest wick. Let's see where it's at. Literally my thought process every day. And there's our bottom. So here we have a price channel, right? On the VIX, we have a nice price channel. So looking at this, and by price channel, I don't know if there's beginners and things, but you can see the resistance here at the top, which I'm just eyeballing this, but you can see we're having trouble breaking this high, and we're holding up above this low, right? All through the price channel. So you can see the 50 and 200 are kind of hugging each other back and forth. This is chop suey. I don't recommend jumping into this at all. That's time decay, like crazy. On the flip side, once we broke up out of this price channel, right? So we're over the 50 here, but we're still within this price channel, right? So we still have resistance. So yes, can we ride this up? Absolutely. If you see the 50 cross the 200, like here, you can ride that up. That's a nice, safe entry. And I say that because the 50 is up over the 200. That being said, I know I have resistance here. So I'm not going to push it, right? I'm not looking for a home run right here. This is a small scalp. Because you know you're within your channel. Now, once you start breaking up out of that price channel, like here, now it's a little cleaner. The uptrend is a little more defined because we're not constrained to this resistance anymore. And this is, again, this is UVixie. So this is just something that I like to run in conjunction with the SPY. So like if you're running the SPY calls, like today, UVixie, or not today, when was this? This was the 19th. So yeah, you see UVixie was up, SPY was down. Today the SPY's ripping and UVixie is going down. So again, that's just using moving averages. And you also want to use those price levels because they'll help you make better decisions in the market. Did that make sense as far as the 50 and 200 go? Just make sure like you're on your uptrends, you want your 50 to be crossed up over the 200. Because a lot of times if it's below it, you'll see the price will like cross the 50 and then reject at the 200 and come shooting down. So you always want that confirmation of the uptrend with both of them. Let's see. Do I have a live trading? I don't have a live trading room yet. I'm working on, I have a Slack community. It comes with our course, and I pretty much call out price levels. I don't like to call out entries and exits only because like I feel like especially for beginners, that makes people like really reliant on what we do. And I feel like if you can get this strategy down pat, then you can pull up whatever stock your heart desires and scalp it and be successful. And that's really what I want for people, is to be self-sufficient and be snipers. I really just want to raise up as many snipers as possible. So yeah, I don't have live trading, but I do have a community where we have support and we do call out price levels. Yes. So yeah, I'm not always going off of, sorry, I just got another question. I'm not always going off of, well, yeah. So if the 50 is crossing up over the 200, typically it'll already be above the 200 if I'm on the upside. And then on the downside, I just like the 50 doesn't have to be below the 200 because a lot of times, like here, here's another move on UVixie. You can see it cross below the 50, but it didn't actually get down to the 200. So really, it's all about being down below that 50 or above the 50. Let's see. I feel like the SPY had so much good movement this week. That's why I keep going back to it. Did that make sense? Even though you're trading off for 1 minute, you always go in the direction of the 50 over 100. Yeah, so, okay, so yeah, here, for example, and again, it's like the bumpers. So like if I'm crossing the 50, like here, here's a downtrend and here's my bumper, right? The 50 is my bumper. So if I hit the two, or not the 50, the 200. So if I hit the 200, And a lot of times you will see the stock hit the 200 and bounce, like here, for example. The SPY kind of hugged. It didn't even touch the 200. It wicked it, I believe. Let me look. Yeah, so you can see here how it wicked the 200. It literally wicked it and bounced up off of it. So that's why I say if you're already in the trade, like if you're coming down over the 50, just look at the 200, look how the stock moves there. Sometimes it'll break below the 200, like here. Sometimes it'll bounce off of it. If it breaks the 200 though, that's extremely bearish. Typically when you break that 200, you're going to see a downtrend. If your price breaks the 200 EMA on from what I've seen, you'll get one of these death crosses, which will continue down for you. And then here, let's see. I'm going to pull up the SMAs too. I feel like I've given the EMAs all of our time today. All right, so here's our simples. And let me change these to lines so you can see them. So we're going to do a 10, a 20, and a 50. Let's see, I don't want dots anymore. All right, and the 50 and 200, if you guys notice, I like to make them a little thicker just so you can see them. And I think I've hidden this from myself actually on my chart. There we go. Yes, I love the Haikanashi candles. Love them, love them, love them. All right, so let's go to the SPY. Let's see. I'm trying to find a death cross for you guys. Okay, so this is from, I'm actually going to change the color of my 50 because I feel like the blue is confusing me. Sorry, y'all. All right, here we go. And I'm going to add the 200 moving average. And we'll make that bigger. Okay, there we go. All right, so same deal with your simple, literally same deal. You see we're below our 10, trending down. Here's our 50. Let's see. There's a death cross up here. Let's see what else happened. And again, for your short term, I'm really, really a huge fan of the EMAs. But that being said, here's our same break up over the 50 and our run. There's our run up, literally the same thing. Let's see. So another thing I like to look at is how the moving averages are moving in relation to one another. So if I'm looking at this, right, it's kind of like putting all the pieces, all the clues together, if you will. So I see a little bit of selling happening, not super strong because we're still over this 10, right? But look how far apart my 50 and 200 are compared to where they are now. So back earlier today, they were literally super far apart. They were ripping, and now they're kind of coming together. So that's my first, like, put your antennas up if you're a bear. So the second thing is look at your MACD, right? You've got your MACD starting, you've got some sellers stepping in. Your MACD is coming closer together as well. Your third kind of whammy is going to be your RSI. Sorry, your RSI was overbought, and now it's pulling back in a reversal. And now you can see the selling kind of happening. And so is this going to break the 50? I don't know, but I can look at this and tell you that they're moving closer together. So that's actually kind of the first sign of a reversal. But yeah, so you can kind of see these candles, and it's not super strong selling because these candles aren't, I mean, they're not huge body, red candles, but still the sellers are here. Your MACD is, it's getting closer and closer together. So I think as soon as we break this, you'll see some sellers really start to step in. So this system, I've been trading it really since January. I started trading last March and I quit my job in August. Would not recommend. It was amazing to like do this full time, but then the market corrected in September and it was terrifying. So it was pretty crazy, but that's really why I got into technical analysis, because a lot of things in the market can be avoided. Not losses. Losses can't totally be avoided. Like they're part of life. But your losses don't have to be devastating. You don't have to blow your portfolio. We can mitigate losses with charting. Absolutely. Yeah, the SPY, and we got a cross on our MACD. Let's see. Are you guys familiar with the Haikanashi candles? Yes. Yeah. So I do swing occasionally, but I'm just not a huge fan of swing trading just because I've kind of trained myself to lock in profits. And so if I see profit, it kind of like gives me this reaction to take it off the table. So I do swing trade occasionally, but like here's a trade I've been watching, PayPal. This is the weekly chart on PayPal, so one candle per week. And you can see here back in February, we wicked at 309.14, and then it kind of ripped and it wicked again at 307.82. So again, this is a weekly chart, way wider time frame. But what I'm kind of waiting for is PayPal to pull back, which it's doing beautifully now. Um, and I want to get in there and ride this thing up to a new high. So you can go from your weekly to your daily. I would recommend, this is literally perfect. I may find my entry on PayPal today, actually. So you can see this pullback on the daily chart, and now we have a doji. We're reversing back up. So hopefully this runs because they have earnings coming up. That's a good catalyst. Let's see. But yeah, so like I was saying, sorry, I got sidetracked. One thing I really like about just swing trading is like I like you can plan. Like you have to plan for these. You can't just say like, oh, I think it's going up. I'm going to swing it into tomorrow. Like no, you have to plan. So for me, I have my price level, this 307.82. That's my resistance. And so now we have a little bit of support where we've bounced from this low here, 288.81. So for me, I would like to see, which this isn't even a strong bounce. It's only up like almost not even 3 points today. But I like to write down my price levels and I like to set alerts. I set alerts so I don't have to sit and stare at PayPal for weeks at a time. I can just say like, excuse me, I can say alert me when we hit this level, when we hit this important price level, just alert me, and then I'll know what to do. Here, this low here, what is that? 288, and then over here, 289, over here, 285. So I'm gonna say, for now, we can say this 288 is our level to watch, which we're hopefully gonna bounce off of. I don't know. We'll see what happens with the Nasdaq. I still think it's a little hot, but let's see. Oh, Haikanashis. So yeah, honestly, the regular candlesticks confuse me. I'm not even gonna lie to you guys. But the Haikanashis are really, really simple to use. So basically, looking at these, just remember they form like each one of these forms from the previous candle from the middle. So like, let's see. Okay, here's an example. It's a little choppier. All right, so here's your super bullish candle. Your buyers, they're always going to push up from the bottom. Your sellers are always going to push down from the top. So if I'm looking at this candle, I can clearly see the buyers push this up. The high here was 250, 265. Next guy, you see we have a higher low just because the buyers were able to push the price up even higher. But the wick, we have a lower high, right? We have a lower high. So looking at this, all I can see is that the buyers are still pushing up on the price, but there's a little resistance. Next day, we have a new, a higher low and a higher high, right? So the buyers are still pushing, still pushing, still pushing, still pushing. Here we have, well, this is a little resistance. You can see the sellers smack this wick all the way down, but the buyers are still pushing the price up. So we have a little body here on this candle, but this long wick tells me that there's some selling pressure. Here again, we have not super strong, we don't have a huge body here, but again, buyers push the price up, but at the top, our wick is lower than here. So we have a lower high. And then boom, there's your doji. You have buyers pushing up from the bottom, you have sellers pushing up from the top. So it's a little sideways, and then your sellers took control. One thing I can say about this, looking at the bottom of these, even though the sellers are selling, the buyers are still holding up their end of the deal, right? They're still holding it over what? 50. There it is again. So this is our 50 moving average. The buyers are holding it up there. They tried to buy it up again, and then the sellers actually broke it down below there. So you can see there. But that's how you read them. It's literally tug of war. But just remember, always remember your highs and lows, especially those are super important. You always want to have those higher highs. And then when your highs aren't as high as they were high before, then that's a sign of a reversal. Or if you see like, let's look over here. If you start seeing your candles, let me pull up, I'm sorry, I'm going to pull up the SPY one more time. If you start seeing like this, where you have like 1, 2, 3 days of banging against one level. You see this 437, 437, 437. Clearly the SPY has issues at 437. So your stock's only going to bang against a level so many times before the sellers step in and start buying it or running it down. And then again here, right, we have 434, 434, 434. We had resistance there before, but then once we got a higher high, we took off again. So just always use your wicks, use your highs and lows. And I think that'll help you guys too. And that can be on any time frame at all. Let's see. And yeah, I'm still relatively new to the market. I've only been trading a little over a year now, and I've really never used regular candlesticks. When I first started charting, I was introduced to Haikanashi, and that's all I've ever known. So I know that sounds insane, but I have no idea how to use the other candles. But I do plan to learn. That's all I have for you guys. Do you have any more questions? If you want to get in touch, we have an Instagram, Options Bay, that focuses on stock options. We have another one, Investing Bay, that focuses on investing. We're going to get into like real estate and all that good stuff over there. But our DMs are open. Again, we have a trading community. We have a course. I have weekly mentorship. We're on Clubhouse all the time. If you guys ever have questions, feel free to reach out. I'm really happy to help anybody that's trying to learn this stuff. So the course is, I want to say the course is $75. And then that comes with our community and everything. Sorry, my phone's going nuts. And then I have a bundle that has like the actual intro to options and stocks course. It has the group, there's a trading journal, and there's a strategy guide. There's like, if you like spreads, there's a strategy guide. That's $135. But all that stuff is available for you guys if you're interested. We have a room on Clubhouse every Sunday at 5 where we go over our watch list for the week, and we do post that watch list to Instagram. And a lot of times we catch some really good moves on there. So I think that's my time. I hope that was good for you guys. I hope you learned something. But thanks for having me. Thank you so much for having me.